Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1262A, and today's date is April 24th, 2017, and the title of the episode is The Election Economic Surge Has Faded. Data shows something horrific is headed our way. Let's get into the economic collapse financial news. Now, we're going to head out to Greece, and we can see that everything that's been happening to Greece, well, it has not gone away whatsoever. The International Monetary Fund, well, they had a message for Greece. Even if the country secures debt relief from its European creditors, a question that is by no means assured with bailout talks still in deadlocked, the nation still needs even more painful economic overhauls than currently planned. Really? This is a complete shock. You mean the people have to give up more? Of course they do. Remember, the central bank, they don't want to bury a country where they're in default, because that looks badly on the central bank because their product is debt. They need to keep them in this limbo state. Now, they're not going to give up the debt. They want the country to sacrifice even more. And they're looking at pensions, they're looking at tax reforms, they're looking at many other fiscal and structural reforms, and we can see right now this is what they do to countries. Now, going back to 2008, we can see nothing has improved in Greece whatsoever, even though the corporate media was out there continually telling us that things were getting better and better as time went on. Well, they haven't. Nothing has really changed. They still have very, very high unemployment. They're still in a huge amount of debt. They still need more and more credit. And they're still making the people sacrifice. So where's anything better here? There's nothing better. Actually, if they got rid of the central bank and they write off the debt, things would improve dramatically. Look at Iceland. They're improving. This is why we don't hear much about Iceland whatsoever. If you notice, we only hear about the nations that are doing terribly, and the central bank and the corporate media report on them, but how they're getting better when they're really not. Those countries that got rid of the central bank, they never report on how well they're doing. Now, we see that Wayfair, which is an online business for retail, for furniture, well, it looks like they're in trouble right now. Now, of course, the corporate media is out there saying it's because of Amazon launching their furniture seller program. But we see right now that even as Amazon does this, we're going to see other online businesses take a hit, especially those in retail. Because, again, if people don't have funds to spend out in the brick and mortar stores, they're not going to have funds to spend online. And it will not translate from brick and mortar to online at this point because people are still losing their jobs. People don't have discretionary funds, and nothing has been fixed at this point. Now, we do see a positive. After 51 consecutive months, the Caterpillar streak has ended. They have a 1% year-on-year positive growth in sales. Now, this is the first increase since November of 2012. But then we need to look at the reason why this happened. And it was China, which saw a 46% surge in total machine sales, up from 39% last month. But when we look around at the rest of the world, Latin America down 25%, North America down 13%, the Middle Eastern countries down 3%, it doesn't look good. And this looks like this is a one-off thing coming out of China. And we need to understand that so far, IBM, Caterpillar, many other countries, they are reporting declining sales, and they are not getting better whatsoever. Now, looking at the breakdown of what kind of machines drove the global rebound, it was all construction-related machinery, which rose 7%, once again, entirely due to China. Now, we've been looking at the economy for quite a while, and we're realizing that things are rapidly breaking down, and we know there's about 8,000 plus stores that are going to be closing this year, and we know there's going to be millions upon millions of retail space that is going to be available, and it looks like it's going to increase to about 147 million square feet. And this is a commercial real estate bubble in the making. We know that the Atlanta Fed GDP model is now projecting 0.5% growth. Restaurants are experiencing their toughest stretch since the last recession. Foot traffic at chain restaurants in March dropped 3.4% from a year ago. Menu prices couldn't be increased enough to make up for it, and same-store sales fell by 1.1%. In March, U.S. factory output declined at the fastest pace in more than 2 years. According to the BLS, not a single person is employed in nearly 1 out of every 5 U.S. families. U.S. government revenues just suffered their biggest drop since the last recession. Nearly all the big automakers reported disappointing sales in March, and dealer inventories have now risen to the highest level that we've seen since the last recession. And we know that used vehicle prices, well, they're crashing right now. At this point, most U.S. consumers are completely tapped out, and 6 out of 10 Americans, well, they don't have enough money to save even to cover a $500 emergency cost. Just like in 2008, debts are going bad at a very alarming pace. In fact, things have already gotten so bad that the IMF has issued a major warning about it. In America alone, bad debt held by companies could reach $4 trillion, or almost a quarter of corporate assets considered. That debt could undermine financial stability if mishandled. This is coming from the IMF. So when we look at all of this that's been happening here, we can see that the economy has been deteriorating very, very quickly. It has not improved. It is not getting better. And those countries where the IMF, the EU, and the corporate media has been telling us that things are getting better, it looks like we're seeing an improvement, they haven't. And we're looking at this every couple of months, and we can see that nothing has improved whatsoever. It's only gotten worse. And who has to sacrifice every single time? It is the people. Now, we know that the banks in Europe, they are in big trouble right now. And we know that the banks in Spain, they're having a huge amount of trouble. Banco Popular, well, looks like they're going to have a huge problem coming up very, very soon, because they must pull in another capital expansion, this time around 4 billion euros. Last time they pulled in around 5.4 billion, and they raised that 3 separate times with their previous right issues. And they are burning through this like crazy. Now, you have to remember, the bank's market cap is just 2.9 billion euros, and they're going to need more funds very quickly. And Popular's long-term investors, well, they're smarting up here. Some are even threatening to sue Popular for intentionally misleading them in the last year's right sale. It's not just investors who are unhappy. The bank's depositors, many of whom are voting with their feet by moving their money elsewhere, they are very angry. Last year, the bank lost about 6.5% of its deposits base, and it is growing right now and accelerating. Now, according to a report by the financial daily El Confidencial, the deposit outflow is swelling from a trickle into like a roaring rapids where people are like just leaving the bank. And this is a huge problem. We've seen this in Greece, we're seeing it in Italy, we're seeing it in Spain, and all of these banks, they're going to need more funding, and it's getting more and more difficult for them to survive. And it's just going to take one bank to take a dive, and this is going to spread to other banks. Now, Deutsche Bank is out there, and they're saying, well, it was good while it lasted. And remember, we reported on how the global credit impulse had unexpectedly tumbled, turning negative. And as we reported on this, we said as this happens, the reflation of the world's economy, that's going to start to slow. Credit's going to get harder to get. And we are starting to see this. I mean, look at the hard economic data that we are seeing right now. We are seeing that things are rapidly turning the other way. Everything that we saw prior or during the election, well, that's all gone right now. The only thing that's left is the stock market. But all the real economic data, everything that's going on around us, it is falling apart very, very quickly. which tells us that we only have a certain amount of time left. And this means that as we move throughout this year, the data is just going to get worse. It doesn't matter if the stock market continually rises. When there is more and more stores going out of business, when the GDP goes below 0%, when corporate defaults are on the rise, and everything else starts caving in and contracting, imploding on itself, how are they going to explain this away? Well, we've got the stock market. That's all they have. And it's not going to fly anymore. They understand this. And I say they, the central banks, the deep state, they realize that this was the time to start bringing down the system. This is why they started to raise the rates right now. And we're already at a point where they're saying, okay, we have about a 69% chance that the rates are going to be raised in June. Most likely, they will be. I would be surprised if they don't. And if they do raise the rates, it's another signal that they are preparing and getting ready to bring this economy down. Because with each raise of the interest rates, it's another notch of bringing down the economy. This is what we saw prior to 2008. And as soon as they hit that point where things started to really crumble and fall apart, that's when they started to lower the rates. So you'll know when that point hits. So you have two indicators here. Once we hit that height of the interest rates and they say, okay, we're going to start lowering it a little bit, you know right there and then they got the effect they needed. When you see gold moving up and these slams that they continually put on gold and silver, they're not working anymore, and gold starts moving up $50, $100, and they slam it down by like 25, then it goes up another 100. That's another indicator. So we're going to see these small little indicators coming out from all different places to let us know that the economy is rapidly deteriorating. They're bringing it down because we saw these indicators going back to 2007, going into 2008. We saw them going back to the dot-com bubble, and we are starting to see them now. So we are starting to see these indicators. We're starting to see the economy come down. The hard data that we're looking at tells us that we are heading to something horrific. Get prepared. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.